Hey guys, Raf here from the Endgame Investor, and today we're going to talk about the PPI, the Producer Price Index, and the biggest misconception with it, and how consumer price inflation results from it, and how in many G20 countries around the world, the PPI is at or very near all-time highs. And if you haven't subscribed yet, please do that. It helps spread the message. And I hear a lot that I go into good details that aren't in many other videos. And I hope that these details get spread throughout the community so people can be more precise in their criticisms of mainstream economic idiocy. What is the main misconception with PPI and how it gets passed down into consumer prices? So producers cannot simply pass down costs because they feel like it. They can't simply target a certain profit margin and then just charge prices based on what they want to earn. They can't just by fiat or will pass down producer prices they have to pay to make stuff to the consumers. It doesn't work that way. They can try, but if they raise prices, then what happens is demand falls and they might lose market share. So there are two ways that prices are passed down. They are passed down to the consumers, but not just because producers want to earn a certain profit margin. What happens is either the producers will try to raise prices, and if they can't, and they cannot recoup their costs, then they will have to shrink supply. And by shrinking supply, they will cut their losses that they cannot pass down to the consumers, and that shrunken supply will itself raise the prices for the rest of the supply. As supply goes down, price goes up. So either way, whether producers can effectively pass on their costs to consumers directly or not, prices will rise if the producer prices rise, because either they will be passed down directly or they will not, and producers will shrink supply or go out of business shrinking supply. One of two ways that prices will be passed down to the consumer level no matter what. Now let's go into the PPIs of the G20 countries that are most notable and certain 74-year records that were just broken in the US PPI this year, this past year in 2021. Let's begin. First thing I have to show you here is the list of the G20 from Trading Economics. You see all of their producer price index increases for this past month. And we begin with Turkey, hyperinflationary Turkey, which is at 80%, 79.89, goes down to Argentina, also hyperinflationary at 53%, then Spain at 33%, Russia at 29%, Brazil at 29%, Singapore at 26%, Euro area as a whole at 23.7%, Italy 22.9, Netherlands 19.8, Germany 19.2, Canada 18.1, France 17.4, India 13.56, and so on and so forth. And we get down to the United States at 9.7, which is also a record high since its new series came out, I think, 10 years ago. Now the question is, are these normal? How much above normal are these? And we will go into the countries in the G20 where these are at or near records. So you'll see that hyperinflation is bubbling up from the producer level, and it will get to the consumer level very soon, probably this year. You have Spain. You see, it is an all-time record for as far back as records have been kept since the late 1970s. This is the post-2020 surge in producer prices, over 30%. Russia, we also have a near record. We hit a record here and we doubled back a little bit. Russia is slightly more stable because they buy gold. Their central bank buys gold, so the ruble is effectively backed by gold, but the market doesn't quite trust that yet. Singapore, we have record PPI advance going back to the late 90s. Producer price inflation, Eurozone as a whole. Eurozone as a whole, we see this is by far a record for all the countries of Europe as a whole. Italy, 22, record since the early 90s. Netherlands, record since 2006, it looks like. That's as far back as the chart goes. Germany, nearly an all-time record from 1950, it looks like. and we are headed vertical, and we are staying that way. Looks like Canada near record since the mid 1970s. France, all-time record producer price inflation. Saudi Arabia, we just hit a record a few months ago, back down, but we're headed back up again. Now, the United States is at 9.7 or 9.8 or one of those, but there were some very notable records within the PPI for 2021 that were all-time broken. So here are the highlights as I found them in the release. In 2021, prices for processed goods for intermediate demand surged 24.4%, the largest calendar year increase since jumping 28.9% in 1974. 1974 was the year of the oil embargo and the first year of the 1970s stagflation. Second, in 2021, the index for unprocessed goods for intermediate demand surged 38%, the largest calendar year increase since data were first calculated in 1948. That is a 73-year record, all time since those very early data were gathered 73 years ago. Another quote, then we have the stages of intermediate demand. The lower the stage, the closer to raw commodities we are. That's my note. In 2021, said the PPI, the index for stage 4 intermediate demand moved up 12.4% after rising 2.4% in 2020. And then stage 3 rose 20% after inching down 0.1% in 2020. In 2021, prices for intermediate demand stage 2 rose 21.2%, up from 1.4% in 2020. In 2021, prices for stage 1 intermediate demand, which is the closest to raw commodities that you can get, increased 17.5% following 2.6% rise in 2020. And so we have it, folks, that the PPI is spiraling out of control, and there is only a matter of time before this bleeds into the CPI, which it hasn't even done yet. But we will start to see that in the next CPI release, because consumer-facing industries have only registered their price increases for 2022 this past month. If producers can pass on costs directly, it would bleed into the CPI faster. If they cannot, and prices only rise because of supply constrictions when producers go out of business or downsize in order to protect their profit margins, then it will take a little bit longer. But all these price increases are going to come into consumer prices sooner or later, probably sooner. And at that point, the Fed will really start to panic. And what will it do? It will print one last time, and that will be the end of the dollar. That will be the final plunge into a hyperinflationary global scenario, and all other currencies will follow the dollar because that's what they always do. Central banks print together, and they print together now, and they will print together until they all tie each other to a mutual suicide pact all over the world. And if you want to protect yourselves from that suicide pact, you want to get real money now, which is gold and silver. And if you want to know what I'm doing to prepare for this mutual suicide pact of central bankers, then please sign up for a 2-week free trial of the Endgame Investor and learn some Austrian economics while you're at it. It's fun, it's a good community, and you can sign up to be my patron on Patreon at the link in the description below. You get free extra content on my biblical commentary from an economics and finance perspective on the Bible. This is Rafi, the Endgame Investor, and I'll see you soon.